Hello everyone, welcome back to Corporate Decoder, the place where we dive deep into the confusing world of corporate filings. Today we are cracking open the VanEck Merk Gold ETF's latest report. Is it really as shiny as they want you to believe, or is it just fool's gold? Stick around to find out before we jump in if you like getting the plain truth about company reports. Hit that subscribe button. Also, join our Discord channel in the description below where we talk about all things finance. This report shows us how this exchange traded fund or ETF is doing. Basically, this ETF lets you invest in gold without actually having to store bars in your basement. We are going to look at how much gold they have, how much it's worth, and how they are managing it all. Think of this as a treasure map, but for investors. First things first, this isn't your typical company report. This is a Form 10Q, which is a quarterly report that companies have to file with the Securities and Exchange Commission, or SEC. It's like a report card that tells us how they've been doing for the past 3 months. This report is for the period that ended in April of 2025. VanEck Merk Gold ETF isn't your average company. It's a trust that wants its shares to track the price of gold as close as possible. They trade on the New York Stock Exchange ARCA under the ticker symbol GRUZI. Keep an eye out for forward-looking statements. These are like guesses about the future, and the company is warning you that reality might be different. So always take those predictions with a grain of salt. Let's dive into the numbers. This section is like a snapshot of what the ETF owns, what it owes, and its overall financial health. We will look at the assets and liabilities from April of 2025 and compare them to what things looked like in January. The big number here is investments in gold bullion. In April, it was worth about $1.6 billion. Back in January, it was around $1.3 billion. So they've increased their gold holdings and the value went up too. Total assets match the gold value, since for this ETF, gold is almost all that they own. The sponsor's fee payable is just $21 in April. This seems really low, but it's because the sponsor is mostly paid in shares of the ETF rather than cash. That $21 just represents what they owe at the very end of the period. In January, this fee was $252,077. Net assets, which is the bottom line number, comes out to $1.6 billion in April compared to $1.3 billion in January. This increase is mainly because the value of gold went up. The net asset value per share also jumped from $27.0176. This means each share represents a bigger chunk of gold value. Now let's look at the income statement, or as it is referred here, statements of operations. This shows the ETF's income and expenses over the last 3 months. The sponsor's fees were around $894,000 for the 3 months ending in April of 2025. This is up from about $516,000 in the same period last year. This increase likely happened because the total value of the ETF went up and the sponsor gets a percentage of that. The net increase in assets was about $238 million, which is a big jump from the $97.5 million the year before. Gold prices really helped them out. This section explains how the ETF's net assets changed over the quarter. It looks at things like new shares being created, shares being redeemed, and how the value of the gold itself changed. The net assets at the beginning of the period were $1.3 billion and ended up at $1.6 billion in April. They created about $118 million worth of new shares. This means more gold came in to back those shares. A smaller amount, about $8-9 million worth of shares, were redeemed. This means some gold went out as people cashed in their shares. These schedules tell us exactly how much gold the ETF had at the end of April and back in January. In April, they had 4,597 fine ounces of gold. Back in January, it was 460 ounces and 450 ounces. So they added more gold to their pile. This part is super important but often overlooked. It gives you extra details and explains the accounting rules they are using. The ETF is designed to track the price of gold, but it's not actively managed. This means no one is trying to pick and choose which gold to buy or sell. They're just trying to match the overall market. This part explains how they value their gold. They use something called fair value, which is basically what the gold is worth on the open market. They break things down into different levels depending on how easy it is to find a reliable price. For gold, it's pretty easy because there's a very active market. Prior to August 7, 2023, they used something called the LBMA gold price to value the gold, but after that they switched to the selective gold spot index. VanEck, who's also the marketing agent, can potentially replace Merk as the sponsor under certain conditions. This is a bit of corporate maneuvering that most investors don't need to worry about day to day. The sponsor gets paid a fee, which is 0.25% per year of the ETF's net asset value. That might not sound like much, but it adds up when you're talking about billions of dollars. These highlights give you a quick snapshot of how the ETF performed. The total return for the quarter was 17.59%, not bad at all. For the same period last year, the total return was 12.44%. Because this ETF only invests in gold, its success depends entirely on the price of gold. If gold tanks, so does the ETF, so they are putting all their eggs in one basket. Basically, the people running the ETF are protected from getting sued unless they do something really bad, like act recklessly or do something fraudulent. This section talks about anything important that's happened since the end of the quarter. In this case, there's nothing to report. Here, the management gives their take on how things are going and what to expect. Effective May 28, 2024, the ETF moved to a faster settlement cycle for creating and redeeming shares. This means it takes less time for gold to move in and out of the ETF when people buy or sell shares. Overall, the ETF did well because the price of gold went up. The amount of gold they hold also increased because more people wanted to invest in the ETF. The ETF doesn't mess around with foreign currencies or complicated investments. Its main risk is, well, gold prices going down. This confirms that the ETF has procedures in place to make sure the information they are reporting is accurate. During the covered period, there were no Rule 10b5-1 trading arrangements adopted or terminated. This rule essentially makes it so the people in the company do not use inside information to get some personal profit by trading. Alright, so what's the real story here? This ETF is basically a straightforward way to invest in gold. The numbers show that it did well this quarter because the price of gold went up and more people wanted to invest into assessment time. Strengths bite a simple way to invest in gold. The ETF is transparent about what it owns and how it values it. Weaknesses 8. The ETF's performance is entirely tied to the price of gold. The ETF is not actively managed, so you're just getting the market return. Risks, use the price of gold can be volatile, which means the value of your investment can go up and down a lot. And if gold prices drop, this ETF will drop. Overall, if you believe in gold as an investment, this ETF might be a good option. But remember, it's not a magic money machine. It's just a way to track the price of gold, so do your homework before investing. Alright, that's our breakdown of the VanEck Merk Gold ETF's latest filing. What's your take on these numbers and what they signal for the ETF's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord channel in the description where we talk even more about finance. Thanks for watching. See you next time.